I told you Thursday we started to see trend signals start to weaken, and we moved back into, with the sell-off on Halloween, we moved back into a risk-off environment, and the trend turned back to bearish. Will it remain that way? If it does, then again, support could be taken out. We could keep going. I'll be talking about that in the 50 period of support. If we rally back up, you have the gap fill, you have these trend lines. If we can get back above this trend line or take our time hitting it, you can go to a new high. If we hit it immediately, then maybe we get another lower high, assuming we bounce off of support. If we break support, that's bearish. If we bounce, then it buys us more time, or we might try to reach new highs if we take our time hitting the one we broke on Thursday. If we hit the one that we broke over here, then we could move to new highs if we get a close back above this second trend line right here. I've been talking about these trend lines excluding the shadow and including the shadow from the September low. But we are in a risk-off environment. Will we remain that way going into the election and the Fed meeting and earnings? A lot of earnings next week, and more for the S&P 500, more earnings. Or will this revert back to bullish, turn back down, and again, possibly form another reference point of a divergence? I was talking about that possibility on the oscillator. It's still possible, but again, it really depends what happens here at support, and if we rally, what happens at resistance levels and the gap fill. So we'll be watching. Again, it is possible that we did peak over here, and we may just not know it yet. If you lose this level of support, that's bearish. You bounce off of it, then we'll be looking at the gap fill in the trend lines. Currently, going into next week, we are currently in a risk-off environment. Will we remain that way? Will we revert back into a risk-on environment and, again, maybe push a lower high or try to get a higher high if we could try to back test these trend lines or fill the gap? So the S&P risk model is back to a risk-off environment as of our gap lower on Halloween. Is it a trick for the bears, or is it a treat for the bears if we continue to see signals bearish? We'll be watching again what happens here with the oscillator. Does it go negative or does it go positive? We did see a green bar on the NASDAQ, and then it flipped right back. Momentum had flipped back to bullish on NASDAQ. S&P couldn't do it. We peaked on the 17th, and then on the 18th, we got a candle of indecision, and then by Wednesday, on the 23rd, the following week, again, we had a shift in momentum, and it's been bearish. We haven't been able to flip it back. And remember, we saw intraday charts turn bearish, and we saw the daily chart turn bearish here with momentum. It remains that way. Now we're seeing further weakness as we broke the trend line. We saw some trend signals turn back to bearish, and now we're testing our 50-period moving average. Do we see the oscillator go negative, or does it turn back up and we fill the gap, get a lower high, and then resume the decline in the direction of the gap, or do we go up and try to challenge the highs? We'll be watching. Can we bounce off support, or does key support break? And really it comes down to support and resistance. And we broke the trend line right here, including the shadow, and also excluding the shadow. Be watching those trend lines. Do we try to back test? Do we try to fill the gap? If we try to rally to back test, do we see some green? Do we stay positive, or do we end up going negative here? We'll be watching. S&P daily chart, again, momentum still bearish, and again, we've now seen with the breakdown, we've now seen trend signals, and now we've got again the 10 coming back down and touching the 20-period moving average, the blue line there. 10 is a red. Momentum had tried to turn back to bullish on NASDAQ, but we still had a divergence that formed. We did go higher. S&P did not. And again, we formed the divergence. And on some indicators, a triple divergence. Saw momentum flip back to bullish here. We turned up, and again, S&P couldn't do it. But it flipped back there on Halloween, October 31st. We gapped lower. So 10's just above the 20 right now, but you got a red cloud, you've got red bars, and again, we're going to be watching 50 periods down here. We have some support here near just under the 50-period moving average. So again, we'll see what happens. Possible head and shoulders on these patterns, and again, Will we attempt to fill those gaps? We'll be watching. Do we attempt to rally with earnings, the presidential election, or with the Fed? We'll be looking at the gap, and do we backtest? And S&P, the NASDAQ, is backtesting right now. So again, do we get above that broken trend line that I'm talking about in this video? And we flip back to red with the awesome oscillator. Does it go now into negative territory? We end up getting a bigger sell-off? Or again, do we see more green bars and buy a little bit more time? We'll be watching closely what happens here with the gap and the broken trend lines. Here, does momentum remain negative? Had momentum flip on the daily chart October 23rd, 5 days after we had peaked. On the 17th, we saw a trend of momentum signals turn back to bearish. Momentum signals tried to turn back to bullish, but it couldn't do it. Couldn't flip the trend back to bullish, and again, those signals remain bearish. Intraday on the S&P. Again, intraday, I'll be watching. Does the cloud remain bearish, or does it try to flip back to bullish? Do we try to backtest the trend lines, the broken trend lines? Do we try to fill the gap, or do we try to break horizontal support on the S&P? Again, the signals broke down on the 23rd. We saw momentum and the trend signals turn. Momentum's tried to turn back to bullish, but it couldn't flip the trend. And again, the signals remain bearish. Balance of power negative here intraday. The intraday signals remain bearish. See with the election or with the Fed or earnings, do they try to turn back to bullish or not? You get a back test. Try to fill the gap. Thing here intraday, again, we saw signals turn bearish on the 23rd, on Wednesday the 23rd. We saw NASDAQ signals turn back to bullish. S&P did not. And again, had a divergence and a triangle, and then we had the triangle break down. No turn back to bullish, and then NASDAQ signals turn back to bearish. Now we're at the 50 on the daily chart, and horizontal support is just directly below. We'll see if we try to bounce or a little bit lower and try to bounce, or do we break those support levels? And then again, do we go back and fill the gap and back test? Possible divergences could form intraday. We could still go down to horizontal support before all is said and done. We'll be watching if the signals remain bearish and break support, or if they try to revert back to bullish. Now, again, we saw the signals momentum flip right back to bearish with a NASDAQ. We had the momentum line also turn back to bullish. The bars turned back to green, but it flipped right back with that gap lower on Halloween there. We had the sell signal appear, but, well, we had the sell signal appear, and we had the little X saying, hey, could be momentum's trying to turn here, but we didn't have a T. We didn't have for a short-term topping momentum signal shifting. We didn't have the red circle like we had back over here. So again, we'll be watching the gap. We'll be watching the trend line that broke. So we'll see what happens. But we tried to flip signals back to bullish. You see the little arrow in the momentum line. They tried to turn back to bullish, and then we went a little bit higher. We got the divergence, and then we flipped. So we'll be watching to see what happens. Now we have another sell signal here. The background is turning red. The momentum is turning negative. So again, do we keep going? Do we fall further? Does the trend signals do the trend signals, I should say, remain bearish? We're dropping below the little blue line right here, which again is representing the short-term trend, and this represents a swing move, which is now flattening out and turning bearish. Momentum line has turned bearish, so getting some sell signals here. Can we rebound back up or not, or do we now see these signals play out and give us a bigger sell-off? So we'll see how it unfolds. The momentum has shifted back to bearish, and now we're seeing trend signals begin to turn bearish. And we did complete a triple divergence here with momentum, just briefly going slightly higher. Now, the S&P 500, we got, again, the momentum line turning bearish on Wednesday the 23rd. We got the little red arrow right after that. And again, we had these warning signs of a potential short-term peak. That was correct. Then we corrected sideways in the form of a triangle. We had this gray shaded area. It told you, it's telling us we're either going to get a big move up or a big move down. or sometimes they're just short-lived, like right here. But again, be watching. Do we break support or do we bounce off of it? Do we bounce off the 50 period? Just below the 50 period is horizontal support. So again, we've got some sell signals. There's no red circle up here. So again, oftentimes that's associated with the top. It's not there. So that doesn't mean we haven't peaked. As I said, it's possible we have topped and we don't realize it yet if we stop making new highs. We do have the background going to red. We got the sell signal there. We have momentum, went in negative. With that momentum line turning bearish, and it has remained in the negative region as the momentum line has remained bearish. The bars have remained red. So again, we're going to rally back up. We got to see things turn back to bullish if we're going to try to fill the gap or back test. And again, we have horizontal support directly below. And trend signals went bearish. We took out the cloud on Thursday. We dropped below the short-term trend line right here. And again, the swing move has turned bearish and went flatline. So again, we've seen the trend signals begin to turn bearish. Do they remain that way, or do we bounce off support? Does something cause a sell-off? Do we end up getting a sell-off with the presidential election initially, rather than with uncertainty or something surrounding it, or we rally with it? Signals have turned bearish. Do they turn back to bullish, or do they remain bearish? So I'll be watching this. But again, signals on the S&P are bearish from the 23rd, which was fifth session after we had the triangle. It ended up with a downward resolution, so now it's time to pay attention what happens from here. But momentum is bearish, the trend signals are bearish, and the intraday signals are bearish at this point. We go into the week with earnings, the election, and the Fed. We'll see if things can turn back to bullish or if they remain bearish. Next week, again, we're going to have the presidential election. We're going to have the Fed. We're going to have more earnings. We're going to be watching closely. Again, we still have tensions in the Middle East. Iran is suggesting they're going to respond to Israel before the election. They're a geopolitical issue will have impact on the market. We just simply don't know. Again, it's something worth paying attention to as tensions continue to be elevated in the Middle East. So here again, we had the Fed pivot over here. Got a fake out topping tail. Again, candlesticks have to be confirmed. I told you we were going to get a Fed pivot rally. We got the Fed pivot rally. So far, we've peaked on October 17th. Again, my target is 5750 to 6,000. Just under 6,000 is the major trend line in the high 5,900 area. There's a window of two trend lines, including the shadow. When including the shadow, I talked about this in great detail in my last update. I'll link that video at the end of this video. Question is did we peak here in the high 5,800 area, or did we try to go above that? I think this gap is likely going to get filled. We're coming into this key support area, and again, we're currently at the 50-period moving average. The key horizontal support is directly below. We're going to be watching to see how it unfolds. Still got a possible little head and shoulders if we just go back and fill the gap, and that's it. If we stop making new highs, but we'll be watching again. This is 21 sessions after the Fed pivot, which is very similar to the 2001 and 2007 Fed pivots. Will this high hold or not? We'll be watching to see how it unfolds. Or will we get another reference point of a divergence? Do we get a big rally? Do we get a pop and drop with the election? Do we get a pop that gives us a lower high and then a drop? Surrounding the election or the Fed, or maybe we sell off with the Fed, or we get a rally with the election. We'll be watching just how big of a rally it will be. But again, this is the area I told you to be watching if we started to sell off. And again, we broke our trend lines. Let's take a look of the trend lines. We've had these two trend lines on the S&P 500, one including the shadow, one excluding the shadow. I've talked about this at great length and detail. We've broken both of them. So again, we've done technical damage. Again, we had our triangle. And again, triangles can be reversal patterns or continuation patterns we broke down. So again, we've had technical damage done here, dropping below the 10 and 20, which are now pointing down and getting a bearish touch there. And we're resting on our 50 just above horizontal support. So we're going to be watching this. breaking horizontal support would do more technical damage, but we do have this peak right here just below that as really a kind of a support zone right there, just under that level. So if we go a little bit lower, that level could hold a support. We did get an inside day and possibly an inverted hammer here on the S&P 500. This week we had the Fed meeting. I'm watching this 10-year Treasury note yield. If we start turning off of that, then we may try to rally and go back up and fill the gap. But we are testing this trend line, which goes back to April of 2023 there. Well, here's our first scenario. The first scenario is that we had this black trend line right here, excluding the shadow, and we came down, we broke it, we back tested, and then now we're getting the confirmation. The follow-through would be taking out this level right here and not being able to make new highs anymore. Okay, we still have this gap fill. Even if we do go lower, still may go back up and fill the gap, and then again try to back test these trend lines. If we bounce right now, we still could move to a new high, back testing the trend lines. The bullish inside day that we got there on Friday does play out as a possible inverted hammer. Then we'll be watching, do we attempt a recovery surrounding the election or earnings or the Fed or all of the above. We'll see if we bounce off the 50 or the horizontal support, or again just a little bit lower down here at this level just under the July peak. But there is some good support right here, so we'll be watching to see what happens. The MACD had that Class B divergence where you had almost two equal peaks. We'll see if we get another reference point of a divergence, or again, do we stop making new highs on the S&P? Our other scenario, and that is that we just broke on Thursday, we just broke the trend line. This includes the shadow right here, and I've been talking about both of those trend lines, excluding the shadow, including it. And again, do we go up and try to back test and fill the gap but still end up getting a lower high? Here's a trend line from the recent high there, and some of these lower highs it's set up. We were just kind of going sideways, forming a triangle. The triangle had a downward resolution. So again, do we go back and back test the triangle, back test and fill, or back test the trend line, the broken trend line, and fill the gap, make another lower high, or go a little bit lower and do it? Or do we see an attempt to get above these levels and to try to challenge the highs? Again, I talked about the trend line over here from the July peak. I talked about the upper boundary of the rising wedge. So again, we've done technical damage. So there's a very good chance that we may have peaked, not a guarantee yet. We need to see further evidence, but we may have peaked on October 17th and we just may not know it yet. Because it peaked and then it sold off a little bit and then it kind of went sideways and now it's breaking down. So we'll be watching. And again, is this just a pullback and we end up coming back up, or do we stop making new highs, fill the gap, get a lower high, or end up going a little bit lower before we fill that gap? We don't have to fill the gap, but again, we are in a topping process. Very good chance you will. So we'll be watching to see how this unfolds. Now, if this trend line, if we attempt to back test it, then again, and I'm going to bring this up close so you can see it here with this larger picture. If we attempt to back test that trend line right there, if we do it immediately, you could get a lower high. If we take our time doing it, you could still get a higher high and still back test that trend line and come up to this upper boundary still again. That's why I'm saying to be watching for clues. We still may end up forming a triple divergence on the RSI. You still may see it turn up like that. And again, you get this triple divergence in the most recent price action and this larger divergence with the July peak. So just something to pay attention to. If we try to get a big rally and go up to the trend line and back test it and fill the gap immediately, or if we take a little bit longer in doing it, do we come back up here and back test the trend line? And still, that could take us to a new high. So do keep that in mind. Again, I've talked about bouncing off this area and our 50-period moving average to, again, possibly go back and fill that gap or a back test. I talked about that on Thursday when we gapped lower. Again, if we do lose to 50, you've got horizontal support just a little bit lower. So we'll be watching that. I've shown you those trend lines earlier. But again, I've talked about the similarities between this price action over here and this price action over here as far as the RSI. Some similar things, not exactly, but some very similar things. And over here with the price action, the sell-off, the rally, the lower high that ended up setting up, and then the higher high. And again, this is a much bigger version of that. But again, there are similarities. And again, we'll be watching, do we try to bounce off horizontal support of the 50? If we do we back test a trend line for a lower high? Or if we try to get the higher high, again, we still have that upper boundary there. And again, I've talked about this upper boundary on the weekly chart. I talked about this 3 weeks ago when we were tagging this level. And again, told you that we may start reversing off of it. We ended up doing that. Told you we might overthrow it as well. We did not do that. But again, it did act as resistance. Talked about the channels on the Dow and the S&P in the weekly time frame. The Dow, again, do we get a lower high if we attempt to rebound? Do we get a higher high and go up and slam up into the trend line one more time? And if we do, again, S&P could back test if that happens, but we'll be watching these divergences very closely. Dow turned off of trend line as well. Parallel boundary, the upper boundary of the channel. The weekly chart, again, quickly, I talked about this in my last update. Again, we've seen the turn right here off of this trend line right on the nose, and I talked about that possibility or overthrowing the level a little bit and turning. Again, we'll see if we can try to rebound off of the 50 or go a little bit lower and off of horizontal support. If horizontal support breaks, that would be extremely bearish, but if we can rebound, and maybe we overthrow the 50 a little bit, if we can rebound, we'll be watching the trend line. It's the trend line I've been showing you that we just broke. Trend lines we just broke with the rising wedge. And again, do we try to back test the one we just broke and fill the gap? But if we do we get a gap and trap where we go back up and we try to hit this level again, or is that it? But again, you've got some major resistance going on here. If we go a little higher, again, you can still hit that trend line, the upper trend line. We have not reached it in the monthly time frame that I've talked about. I featured that in my last update. And again, we hit the red trend line at 57.50. We're in between the black and the trend line. And again, it's excluding the shadow and including the shadow here from the 2000 peak. Again, get a topping tail in the monthly time frame. I'll be talking about that throughout the month. We'll be watching to see if it's confirmed before the month ends. The topping tail candlestick and the reversal that we got in October. But again, we'll be watching these trend lines. And again, those scenarios at this point are still possible, that the topping tail was a peak in October. The other possibility is, again, we still try to tag this upper black trend line, including the shadow from 2000, and again, move closer to the 6,000 area, or even overthrow it. The month of November would take us just above 6,000. The month of October would take us just below it. So again, watching this monthly chart closely. If the S&P 500 breaks the 50-period moving average, we go to a little bit lower levels. Again, horizontal support is at 56.70. 56.70, rounding up. That's the July peak right there. And again, it's just directly below. So again, if we do end up forming a divergence on the RSI, then that level could be tagged. And also we have, again, the peak right here just directly under that, right around 56.50 or so. So you've got the support zone right here, 56.50 to 56.70 or so, right in there. So we'll be watching. Now, we don't have to form a divergence right here. You don't have to form a divergence. You did reach an extreme. So again, we did get an inside day. We'll be watching. Do we go a little bit lower and try to bounce? Does the inside day give us a short-term bottom right here that we try to bounce? And again, if we start losing this level of support, that would be extremely bearish day. The gap fill is pretty much back up at the trend line. And again, I'm talking about both the trend lines. And again, if we get above this trend line, then the other trend line would take us back up. And let me thin that out and turn it back to black here. If we got above this trend line, again, this trend line and the declining blue trend line, the upper boundary of the triangle, if we back test that other trend line, we already did immediately. If we get a second back test to it, we can move above this trend line. I'm watching these two trend lines, but while we have the gap, that we could just fill the gap right here and still just back test this trend line. Not so with NASDAQ. If we fill the gap with NASDAQ, we'll move back into the trading range of the rising wedge. Here, if we just back test this broken trend line that we broke on Thursday, we don't necessarily have to move back above it by filling the gap. We can still fill that gap and not move above it. Not so with NASDAQ. NASDAQ broke the trend line on Thursday, on Halloween, came back towards the 50. We're still above it. S&P's testing it. But we tried to rally back above it there Friday. We closed just right on it, just right there, just right below it. But, so again, possibly back testing it here immediately if we continue to drop. But if we get above the trend line, and we attempted to do it on Friday, if we have a bullish inside day here that plays out, then we'll be watching the gap fill. If we try to fill the gap, we'll be moving back into the trading range. Okay. Now we have this other smaller triangle, okay, that I talked about from the September low that we broke down and we back tested it and then we turned down. So again, it's what I'll be watching is, does this high now hold? Okay. And again, do we just come back up here, fill the gap, and that's it. And you have a move back into the triangle, but you still struggle to make a new high. You still struggle to, test the July peak over here. And we're still, in this trading range, filling the gap over here, as I've talked about. Again, predicted filling that gap months now, and even while we were declining, I told you it was going to happen. Eventually, we were going to go back up and fill that gap, and eventually we did. We're now there. So again, my guess is we're forming a double top. I think we end up getting a lower high. We'll see if we rebound. Do we get a rally, but then have it fail, or do we keep going? Okay, if this is a breakdown, a back test, and we just, have a gap and go, or again, is it a gap and trap and we try to come back up here? And if so, do we take out the July 10th top? 20,691. So far, again, we were just under that. Had some negative divergences play out here. And again, we'll be watching to see what happens with this gap and what happens with the broken trend lines. And do we end up pushing back above this broken trend line? So we'll be looking at the NASDAQ closely and the gap fill. We do make it above this peak right here. We still have this upper boundary right here from, again, the highs over here, this upper boundary, the rising wedge there in black. Again, if we get a rally with the presidential election or with the Fed or with earnings, we'll be watching these gaps to see what happens. If signals, signals have started to turn bearish now this past week here, do they remain that way? And do we breaking these 50-period moving averages and horizontal support there on the S&P 500? So right at that trend line, possible back test, try to get above it. It failed so far. When we were forming the divergences, we had a triple divergence here with momentum. We saw the sell-off on Halloween. I told you the NASDAQ momentum had turned back to bullish. I was watching to see if S&P would. NASDAQ moved slightly higher. The S&P got a lower high. NASDAQ is still below the July peak. So again, we're watching closely. You can see the trend lines just all by themselves. Again, the moment of truth. Do we remain below that trend line and keep going lower, or do we try to get back above it? And again, we'll be watching the gap and the moving averages 10 and 20 there. Quickly, just so you know, the linear scaling here, we broke it and back tested it, and the linear and the log, the scaling is just a little bit different what's going on here. Here, we've back tested the trend line with linear to get back above it on an intraday basis. The log scaling with NASDAQ, it was more of a decisive break, and we went back up towards the trend line. But I look at both linear and log. Usually log, it's longer term on the daily or the weekly, monthly charts. Up close in the more recent price action, I always look at it. But anyways, just watching that trend line. I told you, I thought we reached extremes here. We came down, and again, on the linear scaling, we're just hovering right at that trend line after breaking it. Again, got to be watching. Do we come back down, form a bullish divergence, and go lower? Maybe rebound with the bullish divergence, or have we just reached extremes? Do we attempt? We got a bullish inside day on the daily chart for NASDAQ and S&P. Do we try to recycle back up? And if so, we'll be watching the gap here. We did have, again, multiple point divergences. This divergence gave us a little bit of a pullback. We rebounded, went slightly higher, got another one here, And again, even in the most recent price action, and again, I was watching signals flip back to bullish. I was watching to see if S&P signals would flip back to bullish with the triangle. They did not. And again, the momentum remained bearish on S&P. So again, we'll be watching to see if we try to fill that gap, or again, do we start breaking more technical support levels. 60-minute chart.